Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Good morning.
Hi, good morning. Yesterday, it was heartening to see the markets recover from the day's low. But we've got another expiry to contend with tomorrow, and so many earnings. 4 nifty companies report their earnings today, and many from the F&O, non-nifty companies.
Well, that's right. After a while, we saw green on the screen, and it was good to see, and bright green as well. After a while, we ended at the high point of the day, but obviously that was an expiry-related move. Let's hope that we're in for better times in this series.
Absolutely, Nigel. And I think, yesterday we were 4 days away. Today we are 3 days away from the union budget, right? And I want to just start with that point. I'll get to the global stuff, etc. in just a bit. But, the basic idea was that, this is a market which is heavily short and FII positioning, and Nigel will put out the data in terms of F&O positioning in just a bit. But, as when we came in yesterday, FPI shorts and index futures were at an all-time high. You were going into a big event 4 days out. So will they be covering? And I think I'm starting with, something similar today. It's just that it's not 4 days, but 3 days, right? So more room for more positioning-led rally as we begin this session and over the next couple of days. I think there is room that the market is able to do it. Let's see. The budget may not offer too much, but we'll only be wiser in hindsight going into the budget, and everybody will say, well, it doesn't matter and this and that, but it's a big one. So you will need to be prepared for that if you're trading and if you're sort of heavily on one side of the trade. Now I'll start with the global stuff, right? Massive slump in the broader dollar. The dollar index was down 1.16% last night, and we are sub 97, 96 point something on your screen. This is big, and again, something I highlighted yesterday as well, which is, on Monday when we were not trading, the dollar had fallen sharply against majors, against Asian emerging market forex, and that kind of continued last night in the US session as well. And the reasons, of course, are a few, but basically President Trump once again saying that he's not concerned with the decline in the dollar. Actually, his exact quote is, dollar is doing great, right? And so, in a way, explicitly green-lighting the decline that we've seen in the dollar. They want lower dollar, lower rates. That's well known. It was one of the first few things which we knew when President Trump and, of course, this new administration took charge. The rupee recovered yesterday as the dollar has been weak. I think, and that rupee recovery allowed equities to breathe a little bit as well. I think it's quite important. It was up 19 paise. We ended at about 91.71. against the USD. I just want to point out just one thing, right? The 10-year GSEC, and this is something which is a little perplexing, that actually yesterday closed at a new all-time high. We are at 6.71. So, is this something with regards to the budget? Is the bond market getting a sense that the government is going to expand the fiscal a little bit, do a little bit of deficit spending? Is it something else? But I think this bears watching. This is negative equity. You don't want yields to head higher if other things start to cool off a little bit, but something we will pay attention to and talk more about. U.S. equities hit new all-time highs, S&P 0.4% higher, NASDAQ 0.91. Anyway, they were about 1, 2, 3% away from all-time highs, even with these corrections in the recent past. Oil prices, a sharp move. 3% higher, 67.5 is where Brent oil prices are now at. Precious metals, the rally continues, and what a move, right? Silver, 8.5%. I'm looking at spot prices last night. So 8.5% and 3% on gold, respectively. So, silver ETFs, gold ETFs here in India, of course, racing ahead to try and keep pace with the move in that sense. Consumer confidence in the US that fell to the lowest since 2014. Perhaps another reason why the dollar perhaps was a little bit on the back foot last night. And of course, US is proposing holding payments to private Medicare plans at the same level it was last year. Expectation was that it'll go up 4-5%. It's actually absolutely almost no change. So there are companies here, companies like Sagility, IKS, etc., which we will need to watch out for, and we'll try and speak to some of them as we go along. Big earnings later tonight, which have the ability to move markets. Meta, Microsoft, Tesla will report. There is a Fed decision that is tonight, which we will react to tomorrow morning. But in all likelihood, the Fed is expected to hold rates and leave rates absolutely unchanged. The big headline, whenever that comes, and it's expected this week, is, the announcement of who will be the new Fed chair. I'll just tie in the levels. Nifty, if this bounce is to continue, by the way, yesterday we almost got to the 21st January low, which was 24,919, and then from there we saw a very sharp bounce. And I think it's possible we head to 25,440, which is the upper end of this falling channel on the index. Hopefully that's another 250, 300 points away from here. But let's see if you're able to do it. And we can maybe show you a graph as well, which kind of puts that channel pictorially much more powerful in that way. Bank Nifty saw a sharp bounce in the last 1 hour. And here the 20-day moving average is nearby now with yesterday's bounce, which is 59,516. So that's the overall picture. GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick it up from there. 14, 15 points higher is where we're at. As I said, positioning and where we stand there. Nigel has walked across to the wall. Nigel, over to you.
Well, yesterday was a relief rally that we saw, and it was good to see. In terms of volumes, it was rather high yesterday. And if you look at the cash market flows, well, the FIs, they were net sellers, close to the tune of around 3,000 crores, while the DIs were net buyers. But, the highlight yesterday was that the gross volumes were much higher, telling you that there was an expiry-related factor that did play out. So the expiry day went to the bulls, the January series went to the bears. And in January series itself, the Nifty was down close to around 3%. But keep in mind, the Nifty Bank was the outperformer because that was as flat as can be. Which brings us to the rollover picture. Market-wide rollovers, Nifty rollovers, in line with what we've seen on an average for the last 3 series. But the Nifty Bank, the rollovers out there were relatively lower. Because for the last 3 series, it was ballpark around 75 to around 76. Now, that, in fact, has come down to around 71%. So it appears some of the shorts didn't roll over their positions because, remember, this market is net short. If we're looking at the total open interest, the Nifty futures open interest, well, it is heavier at the start of the series. If you compare it with the previous 2 series, definitely the open interest is higher because you've got plenty of queues coming up in the February series itself. What about positioning? Similar to what we have seen in the past. The FIs, well, in percentage terms, they are net short, while the clients, they are net long on the index itself. But in absolute terms, that's what's telling you the story, because the FI net short positions is much higher in comparison to the past. And keep in mind, we had a regrouping with regard to the contract size. So the FI net short positions are aggressive at 1.7 lakh contracts odd, while the clients, they remain net long as well. Going to the options data, the 25,000 call as well as put, they were fairly active. If someone is writing these strikes, well, and playing out a short straddle out there, then they're pocketing close to around 550 rupees, and they're hoping that the Nifty stays in this 1,000-point band. But otherwise, if you just look at the data points and you punch in the options data, the premium out there, for example, the 25,000 call, premiums around 400 rupees or thereabouts. So the resistance that will come in at around this 25,450 or thereabouts. While on the downside, the 24,900 mark, we've gone there a couple of times and we've bounced off that. So you'll be fancying your chances if you get a dip towards that 24,900 odd. The big cues to track in the February series, we're going to be having the Union Budget in the next few days. Earnings continue to trickle in, and big central bank meets, whether they talk about the RBI, FOMC, or even the ECB. So interesting times. We're a good close to the past series. February is giving some hope that maybe we could extend by a couple of 100 points on the upside, even from here. And the Nifty Bank will have to play the all-important role.
Thank you very much for that. As I said, it's an action-packed day for Nifty companies. L&T, Maruti, BEL, SBI Life report their numbers, and then many F&O companies like TVS Motors, SBI Cards also reporting their earnings today in the Parliament. The budget session officially kicks off. Tomorrow is the economic survey, and then, of course, followed by the budget on Sunday. And globally, eyes will be on the FOMC decision and big tech earnings like Microsoft, Meta, and Tesla. Let's also tell our viewers, okay, before let's invite Mark Franklin, Deputy Head of Multi-Asset Solutions Asia at Manulife Investments, on the show now. Thank you very much for joining in. Well, yesterday, the landmark deal between India and EU got announced. While it's been long in the making, it was also seen as a bit of a strategic hedge against the tariff policies by the US. What do you think the US reaction to the India-EU deal is going to be? So far, we haven't heard anything from Donald Trump.
I think the reaction would be quite limited, to be perfectly honest with you. It's not as if the Trump administration doesn't have other things to focus on, both from a tariff and industrial perspective, but also from a geopolitical perspective. But indeed, this is one of the implications of a more assertive, abrasive approach to trade relationships espoused by the US administration, is that other countries will seek the comfort from more entrenched bilateral agreements, which ease trade barriers that had been in place hitherto. And in fact, India and the European Union historically have been some of the strongest proponents for tariff and non-tariff barriers to restrict imports across various industries into their economies. And so at the margin, this is an easing, but wouldn't necessarily signal a broad-based rethink around trade relationships.
And Frank, it's been one of the worst starts for the Indian equity market start to the year in terms of the month of January. What is your view of the prolonged outflows that continue India's underperformance, and what are you all doing to your portfolio to hedge against this?
It's a corollary of two factors. The first factor is for foreign international investors, institutional investors. They've been quite attracted to some very powerful cyclical stories, both in the Asia region and more globally. So if you look at markets such as Korea and Taiwan, have performed very powerfully off the back of a very, very strong semiconductor, and in the case of Korea, memory chip cycle. And then more globally as well, the broader EM complex, sectors such as industrials, catalyzing investor flows in recent months. For domestic investors in India, one of the challenges for equities is the powerful rally in precious metals such as gold and silver. And there's been some signs of very strong retail demand for wealth diversification into those assets, which has come at the expense of flows into the domestic Indian equity market. From a portfolio positioning point of view, we've been quite cautiously positioned on India for a while, not out of any sense of heightened risk, more from the perspective of opportunity cost. So if we see a reversal in flows and price momentum for those other asset classes and those other regional markets, India may see a renewed bid. And indeed, the fundamentals do screen quite well for us. But at the same time, sentiment and technical factors remain very subdued. And so we need a sign of an inflection point there.
Got that. You know, Mark, morning. Do you think we see a continued large move in the dollar on the downside? Possible?
Well, we've seen quite a rapid move in the last 1 week or so, not only against the yen, but also other currencies as well. Would highlight two things. One is zoom out. What is the Trump administration trying to achieve over the next 2 to 3 years? It wants to try to rebalance global trade so that the US's current account deficit falls dramatically, and you see an industrial renaissance in the US via reshoring and more self-sufficiency across a number of verticals. For that to happen, you need a weaker dollar, because up until now, US domestic production has been uncompetitive from a pricing point of view. So a weaker dollar helps to address that. But then on a short-term perspective, we are somewhat oversold in the US dollar, and investor positioning is very skewed short as well. So it's not necessarily the case that this straight line depreciation in the US dollar necessarily continues day after day after day. You might see technical reversals. But if you then zoom out, as I said, the fundamental objectives suggest that the dollar could weaken further, but we have moved quite a pace already.
All right, let's talk about the near term then, Mark. What are you expecting from the Fed tonight, in terms of a rate decision? And the last time we chatted, you were talking about a probable hawkish cut that we saw last time around. That came about. But for this year, if I look at, the dot plot, it's suggesting around 2 25 basis point rate cuts. Do you believe that will come about?
Well, what's been quite interesting is that those rate cuts that are still priced in the market have been pushed firmly into the second half of this year. And consequently, assuming there isn't a complete curveball thrown by Chair Powell, this meeting, in theory, should have less sensitivity for rates markets, because even if they signal a pause here, even if it's perceived as a hawkish or a dovish pause, the rate pricing for the second half of the year is less affected. It was only going to be more effective if there were still rate cuts sort of hanging around in the first half of this year. Now, if you look at the data progression since the last meeting, it's clear that the jobs market continues to moderate in the US, but that moderation hasn't accelerated. But on the contrary, some economic data points have actually surprised to the upside as well, whereas inflation data has been broadly in line. So our view would be that the guidance and the interpretation of the data will be largely unchanged. The X factor could be what's been going on from a political interference perspective, and the extent to which Chair Powell uses this meeting as an opportunity to re-cement the Fed's independent stance within the policy-making establishment. But absent that, if he sticks to the script and focuses on data and their mandate, one would expect this meeting to be less of an eventful impact for markets than prior meetings.
We leave it there, Mark. Thank you very much for joining us. Good to get that perspective from you, and talk to you soon again. Appreciate it. What we're going to do is just run you through what's coming up here on the program in the next 2.5 hours. So interactions which are lined up. So 8:35, we've got the management of SBFC Finance to talk about the third quarter numbers. Stock fell sharply. Asim Zru is going to be with us. 9 o'clock, we have BNP Paribas' Kumar Rakesh to discuss the India-EU FTA impact on a variety of sectors. Sanjeev Prasad of Kotak Institutional Equities is a market master of the day. 9:30, the management of CG Power talks to us about the numbers which have come through. The management of Vishal Megamart will be speaking with us at 9:40. So that's an interesting conversation. Later on, we speak with Helios Capital's Samir Arora. He's our budget editor. Budget's 3 days out, and what is Samir got on his mind in terms of expectations? And towards the end of the program, Lata in conversation on why bond markets are sulking. I mean, that point that I made about yields rising, and this is right ahead of the budget. So Abhishek Upadhyay and Suyash Chaudhary with us in a bit.
Time to slip into a break. We've got a lot of stock-specific action to track for you today. We'll get to that in just a bit. For the time being, I'll just run you through the list. Vedanta, Marico, Metro Brands, Pikachi Food, Motilal Oswal Financial Services. They all will be reacting to positive news flow. Add to the list Titagarh Rail Systems and ABB India. On the flip side, Hindustan Zinc, Vodafone Idea, Vishal Megamart react to negative news flow. Take that break. Come back. We get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call, and it's time now to talk about individual stocks. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. But Nigel, the big one is you. Silver prices continue to rise, and the promoter of Hindustan Zinc is looking to do an offer for sale.
Well, Rima, when we covered the Hindustan Zinc's numbers, when we spoke to the management, there was only one thing on the radar. When will the promoter take some money off the table? Because in the past, they've done it at around 500 rupees, and now the stock is close to around 700 rupees. So definitely that temptation was there. And that's what they've done. Late last evening, Hindustan Zinc, they came out, and there was a disclosure on the exchanges that its promoter, Vedanta Limited, that holds close to around 61.8% stake in Hindustan Zinc. They are going to be looking at selling close to around a total of around 6.7 crore shares, which is around 1.59% stake in the company. The initial offer will be for around 3.35 crore shares with an option to sell another 3.35. So that's how you get the total number of around 6.7 crore shares. For non-retail, well, the issue will open today, while for retail, it'll be tomorrow. That's January 29th. The big question is, what does Vedanta Limited get? At the base price, they get roughly around 4,600 crores rupees. They can use that for debt repayment, for their capex, and to pay out dividend as well. And in that, the promoter entity will gain the most because they have the highest proportion in Vedanta Limited. What is attractive in Hindustan Zinc as of now, and why do the promoters choose to do something like this? Because it's the only listed silver play here in India. Silver now contributes close to around 45% of the EBIT. Remember, a few years ago, it was around 27%. And if I go back, even more, 10 years or so ago, it was only around 10-12%. Valuations are high at around 11 times EV upon EBITDA. But I'll tell you what, most brokerages are, not yet factored in silver pricing at anywhere close to around $80, $90, or even $100 an ounce. They're in that ballpark of around $60 to around $65. So Vedanta green, while Hindustan Zinc will open up in the red. Let's focus on Marico, though. That came out with a set of numbers. Mangalam, over to you.
It's a good set, as the street was expecting for Marico. If you look at the revenues, 3,537 crores. The street was working with a number of 3,520 crores. EBITDA just shy of 600 crores again, similar to our poll. And margins at 16.7%, bang in line with expectations. Net profit as well, a little over 450 crores. But don't be, looking at just these numbers. If you look at it year on year, it's a very solid set. 27% revenue growth, 11% EBITDA growth. That translated into a 13% net profit growth as well. Domestic volume growth at 8%, again, at the higher end of street expectations of 7 to 8%. And more importantly, the management commentary as well. Foods, they say, will continue to compound at 25%. Digital brands will see their improvement in the operational performance. So double-digit EBITDA margin is what they are targeting for next financial year. They want to take the digital brands from close to around 1,000 crores right now to about 2,000 to 2,500 crores in the next 3 years. And they are targeting double-digit revenue growth in the medium term with operating margin, which looks like it will improve as well, as copra prices, the key raw material, is down 30% from the peak. All these factors should take Marico higher, been an outperformer in the FMCG space.
Thank you very much, Mangalam, for that. Well, let's just talk about Vodafone Idea now. Rima, take us through it.
Well, it's a mixed quarter. So on the top line, the company's revenues went up by 1.1% on a quarter-on-quarter basis. EBITDA margins expanded to 42.5%. At the bottom line, you can see the reported loss has come down. It now stands at less than 5,300 crore versus more than 5,500 crore. But that is aided by an exceptional profit. If you strip that out, the adjusted loss is higher on a sequential basis. Internals are mixed. So average revenue per user on a blended basis has gone up by 3% to 172. That is good. But the company continues to lose subscribers. The loss in subscribers in the current quarter at 3.8 million on a sequential basis is the most that we've seen in the last many quarters. So all in all, it's an okay set of, it's a mixed quarter. And on AGR, since the relief from the government came in only in January, and these are numbers till December, the company, as of now at least, has not changed any sort of, any P&L adjustments on account of AGR. So that's Vodafone Idea for you, largely mixed. But back to Mangalam, because there are a lot more consumer numbers. Metro Brands, BKG Foods and Vishal Mega Mart.
A bunch of them. Let's start with Metro Brands. A decent performance coming in, led by festive season demand, supported by the GST reduction on footwear above 2,000 rupees as well, or rather under 2,000 rupees. Margins show steady improvement. The net profit, however, it looks like a big jump, a 37% jump. That's because of lower tax expense. So tax expense, same time last quarter was 65 crores, now is around 42 crores. So 15% revenue growth, 17% EBITDA growth, net profit grew by 37%. They opened 35 new stores during the quarter. E-commerce, that saw a growth of 24%, and they will launch a couple of new Fila exclusive brand outlets in this quarter. So all these factors doing well. Metro, I'm looking at it from a green side. BKG as well, decent performance, massive jump in EBITDA, because remember, same time last year, palm oil prices were through the roof, and now they have come off considerably from the highs, and as a result of which, on an 8% revenue growth, the company's EBITDA has jumped 72%. Margins have grown from 8% all the way up to 13%, and that's led to the net profit near doubling. Their volume growth at 8.4% as well is a positive. Vishal Mega Mart, now you would say that 17% growth is good, but remember, the company before listing was doing about 25+% growth. So the growth rate has slowed down, and the festive season shift has led to lower reported growth. Remember, first 9 months of this year, they've grown at around 20%, but the third quarter, it's 17%. EBITDA has done well, 20% growth out there. The net profit also has grown about 20%. The company said that 2.1% was the impact due to Durga Puja dates falling in the earlier quarter, and adjusted SSSG stood at near 10%. They too have added about 29 stores during this quarter, and just because the revenue growth has softened, especially as compared to the pre-IPO period, I expect some red on the stock.
Okay, well, interesting ones. In Vishal Mega Mart, of course, you will see coming up in about an hour and a half or so. Mangalam, thanks very much for that. Motilal Oswal reported numbers as well. Ria's got details on this one. Ria, over to you.
Well, yes, Motilal Oswal has reported quite a good set of numbers in this quarter. The revenue has gone up by roughly 14%, and this has largely been led by the wealth and asset management business of the company. The EBITDA margin has also improved to 52.7% versus 46.3%, and this has been aided by operating leverage. The net gain on fair value change has also seen a recovery this time, but this is still much lower compared to the Q1 highs of roughly 1,068 crores. Looking at the segment-wise performance of the company as well, again, the wealth and asset management business and the home finance business has seen improved profitability this time around with better margins. Although in the capital market segment, which is institutional equities and IB, that segment has seen a decrease of roughly 18% on a sequential basis, with margin pressure also seen in this segment. But overall, good set of numbers for the company, which is why the stock is expected to open in the green today.
Thank you very much for that. Vinny is here with us to tell us more about Titagarh Rail and ABB India.
Hi, good morning. So yes, Titagarh Rail, ABB India, both of them have partnered now. And this is mainly for 25 kilowatt driverless metro propulsion as well as tech transfer that they will be working on. The time period for this order is 3 to 4 years. And now obviously, ABB is going to provide propulsion as well as TCMS orders for Titagarh, and this is going to be for 40 train sets as well as each of the 6 racks of Mumbai Metro Line 5 as well as Line 6. Do not forget, Titagarh had won orders of around 2,400 crores for Metro Line as well as around 1,500 crores to 600 crores for Metro Line 6, 5 and 6. So there's a good order win. Now, they've not mentioned the size, but still this will become a sizable order for ABB because propulsion systems account to around 35 to 40% of the cost of these entire train sets. And over and above that, there will be TCMS, which would come in for ABB as well. For Titagarh, what does this mean? Now, it will help them manufacture advanced driverless metro components locally, and obviously this will support the contract that they've received from that Mumbai Metro Line 5 and 6 as well. So positive for both these companies. We could see some green here today.
Thank you very much for that. Let's do a quick recap then. Stocks with positive news flow are Vedanta, Marico, Metro Brands, Bikaji Foods, Motilal Oswal Financial, Titagarh Rail, ABB India. Stocks with negative news flow are Hindustan Zinc, Vodafone Idea, Vishal, Megamart. But lots happening in the world of commodities. Dollar index has slipped to a 4-year low, and that is pushing up commodities round the world, whether it's crude, gold, silver. Manisha is here for a complete roundup. Manisha.
Thank you for that. Well, absolutely. Everything seems to be running on the higher side right now. You have the gold prices trading at a record high. We've seen $51, $80 an ounce onto that one. It has been a 3% of gain in the gold prices in the overnight market. When you look at the silver prices, well, we have seen 8% of gains into this one as well. There is the debasement trade at play. But apart from that, there's a lot of retail, ETF, central bank buying, which also seems to be supporting gold and silver, both of those commodities. But not just that, as you said, it's the crude oil prices as well. We've seen 2% of gains in that. It's trading at a 15-week highs right now, especially with the very harsh winter that we're looking at in US and Canada, and the fact that the US output over the weekend was lost by nearly 15% has been supportive for the crude oil prices. The only thing that is not doing so well is copper prices, down 2% overnight, and that is because you're looking at inventories gaining not just in US, but in LME and on Shanghai exchanges as well, and that seems to be taking some profit off on that.
Manisha, thanks very much. It's a busy time, right? And a little bit of partying in Goa, Manisha?
Oh, not at all, Prashant. One, there is no network here, and plus there is just so much work.
I know.
Voice tells us something else. I thought it's a scratchy throat because you were partying.
No, I mean, and Manisha is, of course, sending us a fair bit of stuff from the Energy Week, which is underway, and we'll play out, portions of it with top energy and oil leaders from across the world, and of course, India as well. Manisha, thank you very much, and see you back in town soon. So that's commodities in focus. We take a quick commercial break here. We've got the management of SBFC Finance joining us to talk about their third quarter results and, of course, the management rejig, which took place as well. Welcome back. Our first corporate conversation is with the management of SBFC, and the stock intraday should come up on your screen. They of course reported numbers, but there was also a top management rejig. So Mr. Asim Zru, founder, MD, CEO of SBFC, of course, is stepping away from his role. He's going to be taking up the role of non-executive and non-independent director, and vice chairman from the 1st of April. Mahesh Dayani, will take over the role as managing director and CEO. Remember, Mr. Dhru and Mr. Dayani started SBFC together, and in that sense, Mr. Dhru steps away and Mahesh now sort of steps in. Mr. Dhru, great to have you with us here. Good morning. Thanks very much for joining us. Prashant, this side. We'll get to more reasons, etc., in a bit in terms of why the changes happen and the numbers, numbers as well. But I just wanted clarity from you. What is your you are stepping away, Mahesh is stepping up. Are you really stepping away? Is this like a exit route from SBFC? I guess that is what markets were worried about yesterday.
No, so Prashant, thank you. When you start a company, it's your baby, and there is no stepping away from parenthood. As the baby grows, there could be change in role as a parent, but there is no stepping away from the responsibilities and the love that you have for the child. So I would like to clarify that this is not an intention in any way to move away from SBFC. I'm going to be as involved as part of what I used to do. The thought process behind this is the following: that the final test of a CEO is a succession. And, for me, that was easier because, Mahesh and I started SBFC together from day one in terms of laying the blueprint of the company to everything that we have gone through. And to that extent, when, the company has been co-built, and he's done, frankly, quite a lot of heavy lifting, while I've got unnecessary credit, for it. So the idea is that succession has always been a test in financial services, and the thought process is that I want to be associated with the company, walking with the company to ensure that the succession is smooth. Because generally, when you hand over and walk away, things tend to get wobbly. So I want to assure you that I'm as responsible to deliver on all the promises made to investors, and I will be there on the con calls, accountable and taking responsibility for what we have done.
Right.
We wanted to do this last year, but last year was a year where there were a lot of wobbliness in the environment, and the Karnataka ordinance had come in, the numbers had shaken. Now that things have calmed down, things are in control, and we have a good visibility of the quarters ahead. I thought that this is as good time as any to do this.
So you're very much going to be part of the decision-making process at SBFC. I mean, the role, as you, I think, alluded to, the role of a CEO, especially in a financial services firm, is even more important than, I guess, in other kinds of companies, non-financial companies. And the market always, of course, has the highest regard for you in terms of someone who has that credibility. But you're saying that you're going to be there very much in a decision-making, overseeing, day-to-day kind of hands-on capacity.
So see, what I've seen is that while we have done a lot of things right in terms of delivering on the numbers that we had promised, and the company's results are speaking for itself. One of the softer things is culture in the organization and how that gets built out. And as the CEO, as the MD, you are so focused on delivering the quarter that sometimes you believe and you wonder whether you are doing justice to the decade. And while the idea is that while Mahesh focuses on delivering the quarter, I help work with him, go down, travel, meet branches, build the right culture down the branches to ensure that we are able to deliver the decade as well. So from, you can continue to hold me responsible for everything that doesn't go right with SBFC. This is not walking away into the sunset. It is a different kind of a structure that we have chosen that usually, people retire and walk away. That is not the intention, and that is not, I think, the right way to do it. We are doing it a little more thoughtfully, and the numbers, hopefully, in the quarters ahead will speak for itself. But in terms of accountability, nothing changes. In terms of responsibility, I will be more responsible for the strategy and for the larger, longer term strategy of the company. And as accountable and as usual, everything that doesn't go wrong, the buck will stop here.
Hi, morning. So you will be 100% committed in terms of your time and effort to SBFC, even in the non-executive role, or will you on the side also look at something else in terms of a professional commitment?
No, so at the moment, there is no thought of doing anything different from SBFC because SBFC needs, at least I believe it does. It needs me to be, fully involved, and also see the real test is a year from now to see whether the transition has been rightly affected. So the test of whatever you do comes a year later, you get the results. So I continue to be committed to building SBFC out with Mahesh. And that is how it has been from day one. We have built it together. It is just that I got more visibility in that role. But to answer your question, no, we don't intend to. I don't intend to look at anything different right now. We may, as a Claremont group, start other businesses in financial services, and to that extent, I would be involved in mentoring those as well.
Okay, hi Azim, good morning and good to see you. When since you've clarified your stance with regard to your position in the company and that you'll be held accountable as well, let's focus on a few numbers. The AUM growth, I think, has been close to the high 20s. If you could help us out, what's the outlook on the AUM growth and what is the gold contribution in this AUM book? Because a lot of excitement with regard to gold, and gold financiers in turn, they are viewing this as an opportunity. So give us those details.
So see, we believe that growth should be moderated based on the culture of the firm. And if you may have a Ferrari, but the roads are Indian, and if you drive beyond a particular speed, the probability of losing control increases. So after due consideration, right from the time we went IPO, we had guided that 5 to 7% quarter on quarter is what we believe, what we can digest as a growth, as a culture within the firm. And if you notice all these quarters, it has been within that guided range. So nothing changes for the next quarter. Also, we are guiding the same 5 to 7% quarter on quarter growth. And in terms of gold, for us, gold has been a good supplementary business that helps us manage the ALM as well, because we are long-term lenders on the other side. So gold, we had guided that will be below 20% of our overall AUM, and at the moment it is at 19%. So a couple of percentage point here, there, but gold will remain within this range. We are not too bullish, on gold, in the long run because the tonnage in the industry is not going up. It is just a value-driven growth. And unless your thesis is that gold will continue to keep growing, top line at this pace, it is not a very great business, we believe, to scale beyond what we are doing right now. So nothing changes in our stance. We are happy with the way gold prices have gone.
Yes.
But everything is temporary. In fact, risks are building in the system and things can move the other way. So we are actually now more focused on ensuring that our LTV, is not very high. So at a total portfolio level, our LTV is about 55%. And we intend to keep it here rather than go to 75-80%, so that in case there is a price fluctuation, we are protected.
All right, Azim, you took me into another space when you spoke about that Ferrari, but need to come back down to the numbers then. The ROAs have been healthy at around 4.6%. What's the outlook? Is this sustainable out here? And also, if you could tell us out with regard to NIMs, there was a marginal dip of around 10 to 15 basis points in the past quarter. Now, we're bracing, hopeful that we get another RBI rate cut. If that's the case, how do you see your NIMs pan out?
So what we have always been very cognizant of is to ensure that our spreads remain constant, and we don't see any contraction in the spreads of the business. So if our cost of funds comes down to some extent, if you notice this quarter, our cost of funds and lending rates have moved in the same direction. So both about 20-25 basis points reduction. So we are focused on ensuring that our spreads remain constant. And in today's time and age, post ILFS, it became very clear that you cannot build a business relying on high leverage. So we have to build a business that delivers high ROA. And so far, we have ensured that even as our leverage has kept increasing slowly, although we are still very, very slightly levered at a debt equity under 2. So to that extent, we still have a long way to go. As we increase leverage, obviously the ROAs will contract a little, but nothing material and from where we are. So we intend to hopefully preserve the ROAs with a few basis point deterioration as the leverage goes up.
Well put, Asim, and we continue to, I hope we continue to have these chats regularly. Maybe one after the budget, because you've got a keen eye on sort of macros and the bigger numbers, apart from SBFC as well. So wish you all the best of luck. And, I love that line. If you might be driving a Ferrari, but you're driving it on Indian roads. So you've got to be mindful to moderate things accordingly. Thank you and appreciate it.
Thank you so much.
Well, we'll take a quick commercial break here. Devin Choksi of DR Choksi FinServe with some fundamental stock conversation in just a bit. 20 minutes away from the pre-open.
Welcome back. Well, let's get in Hormuz, who joins us normally to tell us about all those stocks that moved around in large volumes, and some of them were backed by delivery. Morning, Hormuz.
Good morning, Nigel. And we've been talking about smaller private banks for quite a while now, and Karur Vysya Bank was that addition to that list in yesterday's session. Gains of almost 10% that we saw yesterday. It was the third straight day of gains for the stock. It was the biggest single day gain since February of 2021. And in these last 3 sessions, the volumes have been consistently on the rise for Karur Vysya Bank. What started off with around 30 lakh shares last week went up to as much as 5.5 crore shares in yesterday's trading session. Volumes were the highest since September of 2021 for Karur Vysya Bank yesterday. Those 5.5 crore shares traded compared to a 20-day average of just 36 lakh shares. And out of those 5.5 crore shares, over 1.2 crore shares were marked for delivery, the 20-day average being just over 15 lakh shares. And the stock made a record high yesterday, close to 300 rupees, has risen almost 60% in the last 12 months. Mahindra & Mahindra on the downside yesterday, among the top losers on the Nifty, as the biggest single day fall in volume since February of last year, and it has declined in 5 out of the last 6 sessions now, has Mahindra & Mahindra. In yesterday's session, over 70 lakh shares were traded, 20-day average of just 15 lakh shares. The delivery-based selling worth over 1,400 crores that took place in M&M yesterday, and out of those 72 lakh shares traded, 42 lakh shares were marked for delivery, the 20-day average being just around 9 lakh shares. And from its 52-week high, which is close to around 4,000 rupees, the stock is down almost 12% from those levels. And lastly, a stock that has been on a bit of a losing spree is Syngene. And yesterday's session also, the stock fell almost 10%, in addition to the 8% fall that you saw last Friday as well. But that's not the story. The bigger story is that the stock has been down for 9 sessions in a row now. And the last instance of the stock declining 9 sessions was back in April and May of 2024. And the volumes yesterday were the biggest since April of last year. 63 lakh shares traded yesterday, the 20-day average being just around 8 lakh shares. And out of those 63 lakh shares, 16 lakh shares were marked for delivery, the 20-day average being around 3.5 lakh shares. And the stock, as a result of this fall, is down to a 5-year low now, the lowest levels since August of 2020.
Thanks very much, Hormuz, for that. So that's the picture as far as the movers from yesterday go. Devin Choksi is with us. Devin, good morning. Good to have you with us here. Thanks for joining in. Simple question. Can we see some more this positioning, more than anything, positioning-led rally ahead of the, I dare say, big event? Because many are, when I say big event, many start by saying, well, it's not a big event. Importance of budget is falling and all of that. But it's an event, right? Nevertheless, and I mean, if the government so wishes, it can do enough in that to be meaningful for markets. So, what's your sense? More positioning-driven move possible here?
Yeah, Prashant. Good morning. Well, on expectation lines, yes, I think there should be some position taken. If at all, I think the short position should get covered. I think that is what one is expecting. Maybe some part of the yesterday's volume in the derivative market rollover, much lower, is suggesting so. Now, I think having said that, I think I would like to think how exactly the budget can pull in more amount of investors. Probably, I think the issue out here would be how we exactly attract new capital into the country. And this time around, I think more of a FDI capital vis-a-vis, I think the FPI capital as we are talking about. So that at least I think the larger part of the fall in the rupee currency, I think would probably find stability or it could to get arrested. So from that point of view, I think one is definitely keenly looking at expectations from the budget as to what are the triggers that will probably drive the inflow of currency into the country to prevent the fall in the rupee value. Otherwise, I think on the whole, corporate earnings sector definitely is becoming more and more promising for most of the investors. Currently, the environment looks, I think, quite comfortable for companies to grow in the fourth quarter as well and beyond thereafter. So I think we believe that sooner than later, if the fall in the rupee value stops, maybe you will see the market stabilizing with budget or without budget. I guess I think that is more important.
Okay, all right. Hi, Deven. Good morning. Good to see you in. Deven, I remember even on bad days, you were, reasonably positive on Vedanta. They seem to be doing the right thing yet again. Hindustan Zinc has gone through the roof, 3 lakh crore market capitalization. The promoter entity is saying, let's take 1.5% away from the market. So that's why they're going to be raising roughly around 4,500 crores. That's good news because it deleverages Vedanta's balance sheet. It also could be used for capex or even give out dividends. Your view on Vedanta from here on, and given that this OFS that Hindustan Zinc is going to be open today, the stock is going to pull back. Do you think it's an entry opportunity?
Yeah, Nigel, good morning. Not too sure whether I think one would call it as an entry opportunity, but yes, I think the basic momentum with the metal price rally that we have seen is continuing from Vedanta, and I think it's likely to remain so. The demerger definitely is a good trigger that we have always been talking about, and that's where probably I think 750 price was expected. We are almost in that direction, maybe. Yes, I think the deleveraging of the balance sheet is an important factor, and they are sensibly probably taking out some money from the assets like Hindustan Zinc because I think it is giving a fantastic opportunity today. In my viewpoint, I think I would probably stay invested in this particular opportunity. The merger is definitely giving much more better promise for the growth as far as I think the Vedanta is concerned. Maybe I think some units, I think after the demerger, we may not want to hold it, but otherwise, I think by and large, the white metal is something which one would like to continue holding it as far as the portfolio in Vedanta is concerned.
Yeah. No, absolutely. And I think what a move, right, in some of these precious metals, etc. So, markets, of course, have re-rated some of the underlying names as well. Not very many with exposure here, but I mean, the ones where there is exposure, things have gone well. Devan, we reported yesterday that Axis Bank was up 4.5%, 5% yesterday. My colleague reported that Axis Bank may be looking to buy out the promoters of Credit Access, the MFI company. They're evaluating and they may place a bid. Just to be absolutely clear. Now, source-based information. I don't know if you have any thoughts at all, Deven, on this.
No, honestly, Prashant, I think not seen with a very great detail and how exactly the needle can be moved. I think with the MFI business, I think taken into the portfolio of Axis Bank. One will have to see, I think, what kind of integration strategy they want to evolve hereafter. If at all, I think they end up buying Credit Access. But not sure at this point of time as to how exactly it will reflect into the larger book of Axis Bank.
Okay. Got that. Just to go back to the commodity question, right? Another equity way to play commodities is the exchange itself, which is MCX. Do you have a view? Do you own it? Any thoughts?
Yep, I think you are right. One could possibly argue for the stock exchange business, and I think we continue to hold it. So that is the disclaimer anyway. But I think more important part here is that I think whether you would like to buy the argument that exchange business, I think becomes more favorable with the commodity business, like I think metal commodity in particular, bullion commodity. I think for which I think we want to take a complete bet on the exchange business. The answer would purely be no, because I think that could be, I think, quite a volatile kind of a situation in between. But on the whole, I think the overall approach on the commodity side of the business of MCX, that convinces me that yes, I think the volume is going to be gradually there. So, an increasing rather. So, I think we remain confident about the prospects going forward, but not just the argument because of the bullion commodity currently, which is in favor at this point of time.
Yeah, yeah. The EU-India FTA and the implications out of that. So I mean, yesterday, of course, the top Nifty loser was Mahindra, which was down about 4.5% by close. This morning, there are a few. I mean, there are of course implications, and this will be slowly understood. And just to make it clear, it's not happening now. The actual operationalization is only going to be in early 2027. So there is time. But analysts are also pointing out to the Alcobev sector and Alcobev space and saying, well, this will meaningfully increase competitive intensity for Indian players, Indian listed players. Any thoughts on these segments, autos and Alcobev, or anything else you think needs to be pointed out?
Practically, Prashant, I think I feel it's an opportunity for auto segment. In fact, I think in the auto segment, contrary to the view that most of the global automobiles, I think, will become cheaper, I think it is unlikely to be a case. I don't think that I think they're going to be cheaper because today also, if you look at, I think the likes of Mercedes or BMW, which are the premium category of vehicles, around 90% plus kind of components are domestically sourced and manufactured. About 10% are still imported. And I think it's not going to be substantially bringing down the price of vehicles beyond a point, even though the duty structure comes down on the 10% of the component that they are sourcing. So in my viewpoint, I think the vehicle prices are not going to come down, and neither I think the demand for the Indian vehicles. On the contrary, I feel that I think the export-oriented business, I think possibly will find better legs going forward. So let's wait and see how the details comes out. But I think per se in the auto, given the space in which Tata and Mahindra are operating or even Maruti is operating, I think they have reasonably good chance to remain at that level and maybe grow further.
Any implications, Devin, for auto ancillary companies on the back of the India-EU FTA?
I think excellent prospects emerging, Rima, out of this particular agreement that is being signed. And yes, I think as Prashant said, I think it will take time to roll out many of these initiatives. Maybe corporates, I think, will work together with the counterparts in Europe, and they will probably, I think, decide how exactly which products they want to source from India, etc. But I believe that I think the prospects are only brighter and not otherwise. We remain extremely convinced about the companies which are having the advanced infotainment systems or even the ADAS systems as a product category within their basket. I think those kind of companies reasonably hold a very good chance for, I think, some integration with some of the European majors going forward.
Okay, Devin, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate it very much here on CNBC TV18. We'll take a quick commercial break. We'll come back with the pre-open rates. We also have Kumar Rakesh of BNP Paribas, and we'll talk exactly about that, the India-EU FTA impact across sectors, autos in focus, and also trade. Sudarshan and Mitesh join in for some technical trading ideas. I mean, yesterday we got a bounce. Can we believe it? Can we build on it? So we'll ask them.
Welcome back. As promised, let's get our technical experts on the show. Sudarshan Sukhani as well as Mitesh Thakkar join us on the show. Good morning, gentlemen. Yesterday, we had a good relief rally. It was an expiry-related factor that played out as well. But can the party continue? Can we extend ourselves on the upside? Mitesh, you go first. What would your take be?
Morning, Nigel. So, yesterday I had also suggested that people can take some long positions given the fact that 25,000, 24,950 should be a good support level. And while we have had two incursions below that on an intraday basis, we haven't had a closing below that. And I think that support level still continues to hold well. My initial belief was that we could go to about 25,400 broadly, give and take a few points as the target area. So that outlook still remains that the bounce back could see a test of 25,400, 25,430 zones. And therefore, I think, if not immediately in the opening, if you get an intraday dip, I think that could be a short-term buying opportunity.
So ride the momentum, upward momentum till 25,400, where at which level the markets may reverse and a shorting opportunity opens up. Sudarshan, hi, good morning. What is your Nifty Bank call for the day?
Yeah, good morning. See, the Nifty call was the same as Mitesh yesterday. Go and buy the Nifty and just wait patiently for the markets, because for the short term, they were giving signs that they are looking at a sort of a support level being formed. Now that eventually happened towards the end of the day because it was Nifty expiry. So during the day, things were different. But today the trade remains the same. Stay true to your long positions. If you don't have any, if you want to re-enter, buy on dips. The good news came not from India, but it came from Korea. Korea eventually disregarded the news that was going to affect it and said, okay, forget about it. We'll do what we want. If that's going to happen the world over, then the news will not affect the markets. The markets will go on their own and we will be much better off.
Kospi is up 20% since the start of the year and continues to push fresh highs on the Korean markets today as well. We've got the Kospi gaining more than about 1%.
Korea, I remember, was the king last year.
Yeah.
70%.
And now it's already up 20% in the first month. But let's talk about stocks back home in India. Mitesh, what do you have for us?
I have 3 buys and a sell. On the buying side is Union Bank, which is after a big breakout has had a couple of days of pullback and still remains strong in a market which is seen some stocks turn negative. So Union Bank is a buy with the stop at 172 for targets of 182. Ferrous stocks had some kind of a breakout yesterday. So sale is a buy with a stop at 151.9 for a target of 164. And OFSs were a call yesterday as well. So if somebody has positions from there, I think a stop loss can be revised. But now, as a fresh entry also, the call can be taken with a stop below 79.50 for targets of 8100. And one sell call, that's MFSL. Keep a stop at 1605. Look for targets of around 1520.
Sudarshan, your stock calls?
Well, it's also mainly for the buy side. M&M Finance is a buy with a stop under 360. United Spirits, notwithstanding the agreement, is a buy with a stop under 1290. JSW Steel, which has been doing well, is a buy with a stop under 1200. My only short is Kalyan Jewelers, sell with a stop above 375. And I have an addition today, and that's a positional trade and investment idea. You could consider buying the PSU Bank Bs, which is essentially the PSU Bank ETF, for some months.
PSU Bank Bs. All right. Thanks a lot for that, Sudarshan. Well, Mitesh, I want to come across to you with regard to the biggest casualty yesterday, Mahindra and Mahindra. It seems the street was fearing added competition because of the India-EU deal. We've seen this in the past. I recall when Tesla came as well, the stock was down 4, 5, 6, 7% as well, in that period, and then it bounced back. On the charts, though, how is it looking? We'll get a fundamental view in just a bit. But on the charts, how is this one looking?
So, Nigel, I think, comparing this event with Tesla, I'm not a fundamental guy, but I still believe that, it could be slightly different. Secondly, I think, the stock has had some weekly average around this 3380 mark. It's just closed above that. But the indicators have nosedived, which means that the momentum is broken. My belief is that it should head towards 3200 as a minimum, but in a more severe scenario, 3070, 3050 could be a logical.
Thank you very much for that. Let's talk about the auto sector, mainly on account of the fall that we had in individual stocks like M&M, and even the entire auto index was down over 1%. Well, yesterday, the India and the EU have formalized a landmark free trade agreement, and this deal is likely to be signed later this year after it undergoes legal vetting and is ratified by the European Parliament. Now, for the auto sector, the cars which are made in India will get duty-free access to the EU once the deal comes into effect, and India would cut the tariffs on EU cars with a landing price in excess of 16 lakh to 10% eventually. We have with us Kumar Rakesh, India analyst, auto at BNP Paribas, now joining in. So Rakesh, for cars which are made, the EU car, the German cars, for example, tell us, how does the tariff and the pricing change for those which are completely built in EU and are just imported as is, what we call as the CBU, completely built units, and for those which are assembled in India, the CKDs, completely knocked down unit, because on that also there is going to be a marginal cut in the tariff structure. So for both these two, explain to us how much will the pricing come down by, and will it be material to cause incremental competition for the Indian auto OEMs?
Hi, good morning, and thank you for having me on the show. So for CB units, the current taxation is from 70% to 110% based on the price of the vehicle. And that is targeted to come down to 10% over a period of time of 5 to 10 years. That will entail anywhere close to about 50% reduction in those prices, but it will be in a gradual manner, possibly first coming down to 35% to 40%. That would imply CPU vehicles getting cheaper by about 20 odd percent. But we have to keep in mind that most of the vehicles sold in India are currently through CKD. And most of the vehicles which are available with the European OEMs are already selling in the country through the CKD route, which are relevant for the Indian market. So we think the vehicles which are currently selling through CKD are the real ones which we should be focusing on. And there the price reduction can be potentially close to about 7 odd percent. Now, will that be entirely passed on to consumers? Will that be in one go? We doubt that because there would be significant headwind in terms of currency movement in the recent quarters we have seen. And these companies also have been struggling with profitability. So we think the real outcome of this would be that the profitability of these European automakers in India business improves, the viability and long-term visibility of their business improves. Consumers get more spread of products which are currently selling in Europe, not being sold in India because the volume was not that high. Importing through CBU was very expensive. That starts coming through to Indian consumers as well. But does that impact the existing Indian OEMs, which are the larger market share in India? We don't think so. We think eventually it just expands the market by giving more offerings to consumers, more at the premium end than on the mass segment.
So there will be a 7% reduction in most of the vehicles which are sold in India. But in your assessment, you don't think the European car makers will pass on the benefits to the Indian consumers by reducing prices. And therefore, the competition as of now will be minimal for the Indian auto companies. But what it does is that we will have more cars coming into the Indian market. So in that sense, more offerings for Indian consumers. Is that the correct assessment?
Largely, yes. Yeah, we think there would be some correction, but not the entire pass-through of 7%, we think, because many of these vehicles which we are talking about, the starting price would be about 25 lakh at showroom price. And hence the propensity to spend is relatively higher. The price sensitivity is relatively less. And hence reducing the price may not necessarily drive incremental demand. Rather, it makes more sense to improve the viability of the business in the country.
So, Kumar, hi, morning. Then what does it mean for all the anxiety for Indian car makers? Mahindra and Mahindra sold off, as we were pointing out earlier. So this is not that bad then, right?
It is not that bad. As in, I think in our view, it seems like an overreaction. We have seen similar overreactions in the past as well. You were referring to post the announcement of Tesla's entry into the country, post the UK-India free trade deal as well. What we see these deals essentially doing is expanding or helping in the premiumization of the auto industry in India, giving more offering to the Indian consumers at the premium segment. Most of the listed companies are operating at the price point below 30 lakh. And there we see relatively much lower disruption from these free trade agreements.
Okay. Point taken. The ancillary side, Kumar, I don't know if you have coverage, but if you have a view, is there any benefit? And these are all largely focused, not largely, but I mean, exports is a large part of it. Do you think this makes a difference?
So on the export side, the cost advantage is the real advantage that the Indian auto parts suppliers have over some of the European auto parts supplier. The tariff already was not significantly high on the auto part import into EU. So it marginally improves the profitability of these companies' potentially competitive advantage. But that competitive advantage is already there existing given the low cost of manufacturing, which is in India. Also, many of the companies in India also follow the localization route in which they have local plants catering to the OEMs in Europe. So that is also something which they have already been using. It wouldn't make a lot of sense to start shifting production from those local plants to India and underutilize their European. So that's the second part to that. The final part is even if this increases the exposure or revenue share from European market, I'm not too sure if investors would be really enthused by that, because the valuation multiple for Europe exposure is usually the lowest. The exposure to Indian market, or for that matter, the US market, is relatively gets high valuation multiple compared to the EU exposure. So whatever incremental revenue we can potentially see may get partly offset by the lower valuation multiple it will demand.
So just to paraphrase you, Kumar, no big benefit for auto anchs straight away, right? Because of this.
Yeah, on specific companies there could be, but in general, overall, we wouldn't expect dramatic increase in terms of exports.
You know, budget's 3 days away, Kumar. Any direct, indirect implications for the auto universe you track?
A lot of things have moved to GST. We would still want to see how the EV benefits are being taken into consideration. Some of the benefits are close to expiry, and if they are being rolled forward or not, if that is being held at the current level, those are some of the things that we would be focusing on. Also, the infrastructure spending, how that is being targeted for next year, especially for commercial vehicles, that would be something that we will be watching out for keenly.
Just one final question then. While you do like a lot of stocks like an Ashok Leyland, Mahindra, Maruti, Samvardhan, Motherson, I can see that the upside to your target price is only in Ashok Leyland. So for instance, in M&M, though you do believe that the sell-off that we had was an overreaction, the target price for you is about 3,557. So not too much upside from where the stock currently is. So Ashok Leyland is the best bet in terms of risk-reward right now?
From cycle perspective, it seems like Ashok Leyland is the CV industry is entering into an upcycle. We think there is a strong case for valuation as well as margin expansion, solid free cash flow generation. For the rest of the portfolio of automotive industry, at least from the near term, there is a risk of commodity pressure impacting the margin expansion of these automotive companies, and that's where we are slightly more cautious. We are calculating about 100 basis point of margin headwind from commodities, the way it has inflated over the last couple of quarters. In January, there is incremental more increase in commodity prices. So all of that creates a near-term headwind. Eventually, it will get passed on to consumers. We think it can get absorbed in the system without any material impact on demand. Hence, we are not structurally concerned because of these commodity pressure. But from the near-term perspective, it can create margin pressure for the rest of the auto portfolio. For a commercial vehicle companies, it's in an upcycle, it usually is passed through. So they would be in a better position to pass on the commodity pressure to the fleet operators and other clients.
Thank you very much, Rakesh, for joining in and explaining all that. But back to Sudarshan for his 9:10 call.
JSW Steel is a buy with a stop under 1200.
JSW Steel. Mitesh, yours?
I'll go with the buy call on Union Bank.
Kata, thanks a lot, gentlemen. Well, let's focus on Hindustan Zinc as well as Vedanta Limited. That's because the promoter, Vedanta Limited, is looking to sell stake in Hindustan Zinc via the OFS route. The floor price that they've mentioned is around 685 rupees per share. The total issue size is around 6.7 crore shares. Remember, the non-retail investors, they can participate today, while retail investors, they can do the same tomorrow. What does Vedanta Limited get? Well, at the base price, they get approximately 4,600 crores. Now, that can be used for debt repayment, capex plans that they have, or even pay out a big dividend, which in that case, the promoter entity will gain as well because they get a large proportion of that dividend. What about the timing of this Hindustan Zinc OFS? Well, the market capitalization is at around 3 lakh crore. So the timing is actually very, very good. It's the only pure listed silver play in India, with silver contributing around 45% of the EBIT in this year. And remember, a few years ago, it was around 27%. And if you go back close to around 8 to 10 years, at that point of time, the silver contribution to the EBIT was approximately 12 to around 13%. Valuations as well, not very, very cheap, at around 11 times EV upon EBITDA. That's the forward EBITDA. But keep in mind, the current estimates that most sell-side analysts have, they are factoring in silver at around $60 to around $65 an ounce. And currently, silver prices are more than $100 an ounce. So that EBITDA estimate itself could be revised upwards, which in that case makes the valuations not very, very expensive, which currently we're talking about at around 11 times odd. The issue will get lapped up given the current scenario with regard to the spurt that we've seen in silver prices.
Interesting moves, right, Nigel? And, it's one of the outperformers, I think, towards the end of last year. And, of course, it's not had a bad run this year as well. Titagarh Rail is in focus, and so is ABB India. Vinny is here with details. Vinny, good morning.
Hi, good morning. So yes, both these stocks is something that we'll watch out for. Why? Because they have signed they've partnered to deliver some 25 kilowatt of driverless metro propulsions as well as tech transfer. They'll be working on this together. It's a time period, execution time period is 3 to 4 years. Now, what does it mean for ABB? It seems like it's a sizable order. As of now, they've not mentioned the order size. But do not forget that Titagarh Rail had recently received a couple of orders. One was for Metro Line 5, which was around a 2,500 crore order for 132 coaches. The other one was a 1,600 approximately crore order for 108 coaches for Metro Line 6. So now this order, which ABB and Titagarh are tying up for, is also for Metro Line 5 and 6. So at least there'll be some part of this order that ABB will receive. Now ABB will be providing propulsion systems, which accounts to around 35 to 40% of the cost of an entire train set. So depending on that, there will be some sizable order win that comes in for ABB in terms of amount as well. What does it mean for Titagarh? It will help the company to actually advance its driverless metro components locally, as well as will support the 240 coaches contract, which I was talking about, for Metro Line 5 and 6, and in terms of execution, that starts improving for them as well.
Thanks very much, Vinny. For that, keep an eye on these two names, ABB and Titagarh. Just a quick wrap out of things we covered from the morning. So BKG Foods, Motilal Oswal Financial Services, I mean, that's seeing an uptick 4.5% higher. BKG is up 3. Titagarh Rail, when you just mentioned, ABB India, of course, is the other one. Both are higher as well. Vodafone Idea, numbers 1%. Hindustan Zinc, Vedanta, of course, 3% at the end of the pre-open. Hindustan Zinc, I think, is down about 3. And there is Vishal Megamart, which is up about 0.4%. Marico, Metro Brands are some of the others which are up there on your screens right now. So just getting into market open, and we'll start with the big numbers. This is a large order, by the way, for Suzlon, which is coming through. Almost 250 megawatt wind order from ArcelorMittal. And we will try and speak with the management of Suzlon in short order. But that's a big one, no doubt. And the stock should react as we open up in a few seconds from now. But I mean, will the market see some more relief? See a little bit more in terms of a bounce, mostly positioning led? I mean, I think that's a bigger question that we have to wait and watch out for. I mean, the dollar weakening, substantially, I guess, provides a bit of space, especially on the currency side, at least in the near term. And will that allow equities to breathe a little bit as well? So about 1/3% higher on the Nifty, 25,250 is where we are at. The Nifty Bank is up about 0.5%, I think, 59,200 or so on the Nifty Bank. We've got the small cap index up 0.6. The mid cap index is up 0.5. I mean, there you go. 0.6 each on the mid cap and the small cap indices. The Nifty is up 0.5%, so this is good. And let's keep it that way, I guess, right? So 120 points on the Nifty, but it's early days. Yesterday, we started with a 70-point uptick, sold off 70, and then, of course, the market steadied, especially into close. But this is now closer to 25,300. So 24,440 is the upper end of the channel, which I was talking about in the morning. Let's see if you're able to push through to at least that level. Because, I mean, even the moving averages, etc., are above that. I mean, 200, 300 points above the 25, 440 kind of levels. 130 on the Nifty now, so ticking up and steady for now across the board. 2:1 is the advanced decline right out of the gates. We've got some, 20 odd names which are higher, maybe more, actually more. 30 odd names which are higher, the rest which are lower. Axis Bank is still the top gainer, like yesterday. ONGC, Bajaj Finance come up as well. On the other side, there's Asian Paint, Tata Consumer, Maruti, which are opening. So that's just the Nifty, but let's go wider. Rima.
Well, Asian Paints is the big drag today. One, it was a bit of a disappointing set of numbers yesterday. And two, the fact that the Indian currency is weak and crude prices have increased to $68 per barrel on Brent is also hurting sentiment. So Asian Paints is the big drag today. Citi has a sell call. Their target price is at 2,300. CLSA an underperform call, and their target price is even lower at 1,875, while HSBC has downgraded Asian Paints to a hold. So that's, clearly the stock of the day on the way down. Tata Consumer is also hurting today. So Tata Consumer has slipped close to about 2.5%. Auto generally is on the back foot today. So Maruti, Eicher Motors, Bajaj Auto, the auto index is weak in trade with a cut of about a third of a percentage point lower. Maruti down 2, Bajaj Auto down 1%. Remember, the auto analyst at BNP Paribas was telling us that just in the near term, the rise in commodity prices will impact the margins of auto companies, and in their estimate, it will be 100 basis points hit to some of these, companies. So maybe that's weighing on the sentiment. M&M, though, has managed to, at least is flat, right? After yesterday's big fall of nearly 5%, M&M isn't falling anymore. So Asian Paints, Tata Consumer weak, auto names in the back foot, and you've got HCL Tech under pressure. On the way back, Axis Bank continues to see buying, up 4% now to start trade. And if you add up yesterday's gains and today, Axis Bank is up nearly 8.5%. ONGC is on the rise. Some IT names like Wipro, TCS seeing buying. Trent is up over 1%. Power Grid is up nearly 1%. And we should pull up the companies where we are expecting numbers in the large cap space. Maruti is one, BEL, Tata Motors. So these are some companies where earnings are expected.
Well, that's right, Rima. Vedanta has opened a little bit higher, and we have Hindustan Zinc that's down. That's because of the OFS. Vedanta now up close to around 2%. Hindustan Zinc not down too much. There could be a fair bit of demand. Let's see whether or not it can end closer to the flat line by the end of today. Remember, there were some shorts in the system as well, so keep an eye out on that particular name. What else is moving in today's trading session? Well, after a while, we have some good earnings reactions. Let's pull up a few. Mahindra Logistics, stock up 7%. Good move is what we're seeing out there. IGI, that's the other stock that's in fact seeing a very, very good move in starting trade. Just take a look at Mahindra Logistics flying away. Beautiful move. Metro Brands, the other stock that's opened up, gap up. So after a while, we're seeing really, really good outsized reactions, particularly from the broader markets. MCX continues its winning ways. Remember, in January, the average turnover is around 10,000 crores. That compares with Q3 average of around 7,000 crores. So on the back of that, the street is quite gung-ho on that stock. What's not doing too life? I think Westlife Food, that stock in fact is seeing some selling pressure, at the start of today's trading session. That was a little bit low, and I think it's holding out there. Vishal Mega Mart is the other stock that's actually opened up in the red. Brent crude prices spiked up overnight, and because of that, Oil India and ONGC, both of them trading well in the green. Well, guys, a good start to trade. Some follow through after a good session yesterday.
Yeah, no, I mean, room for positioning-led move. I think that's been the, that's what we're kind of sort of hoping and working with. And the broad thesis, of course, has been a heavily short market ahead of a big event. Can it go into, Friday like that, or will they be covering along the way? So I guess that is playing out. 160 now. So this is a good-looking screen, 25,350. So it's basically about 100 odd points away from a very, it's like a very sharply, not a gentle downward sloping channel, but a very steep fall, because the fall has been so sharp. The upper end of that channel is about 25,440, 100 points out from where we are at. That's it. Lots of other names are opening up, but why don't we bring in Sanjeev Prasad, who's with us, Managing Director and Co-Head Kotak Institutional Equities. Sanjeev, good morning. Great to have you with us here. Thanks very much for joining us. You've of course been advised. You've been advising caution for a while. In the middle, I guess a couple of months back, you turned a little bit more, should I say, sanguine. You moderated your caution, if I can put it that way, but cautious still. What's the view broadly, Sanjeev? A headline view on markets, if I can start with that.
From the last 3-4 months, we have been having slightly more neutral view on the market, from being very negative, as you know, from most of 24 and most of 25. The positive aspect is that it looks like earnings are stabilizing, and you can see that in the quarterly results this time around. We have not seen any major downgrades. And if anything, there could be some upside to earning number looking at where commodity prices are. Of course, that could mean negative for the downstream companies, but broadly speaking, looks like the earnings outlook is looking better, earnings are stabilizing, and FY 2027 should be a good year for earnings growth for the market as a whole. We're looking at about 13% growth for the Nifty 50 index based on reasonable recovery in several sectors where there was no growth this year, particularly banks, pharma, etc., which had, banks pretty much zero growth. The net profits, pharma is a decline. So on the back of that, you should see a decent recovery. Having said that, the headwinds of high valuation remain, and that's been my primary concern with this market. Valuations have been way too high for most of the sectors and stocks, particularly in the consumption names, and that's where you have seen a decent amount of correction. So some froth has gone out of I would say, the tier 2, tier 3 names, but on a broad basis, valuation is still on the higher side. So I assume we will probably go through some more time correction. I mean, we have been in that mode for the last 18 months. Come to think of it, the market has been in that narrow band for a fairly longish period of time. It could still struggle for some more time, supported by, I guess, the fact that earnings outlook is getting better. Domestic investment sentiment is still strong. But on the upper side, you have the cap of high valuation for the Indian market, relatively higher valuation compared to the rest of Asia. And of course, the fact that India does not really have any great tech companies to offer at this point in time. So there is not so much interest in India, at least foreigners are concerned.
Sanjeev, the big question is, when will the FPI come back? At least you stop selling and then you maybe start buying. And it goes back to, many have said it's just simply earnings growth. And the earnings growth is not there. So is it, some are saying we need at least 15% kind of earnings growth. You said earnings outlook is improving. Will we see something similar? I mean, nominal GDP growth is going to be under 10%. For earnings, what's your expectation for earnings growth in 27?
Well, 26 was a bad year. In the sense, we had about 8% growth in earnings, and that's what we're looking at for FY 2026. FY 2025 was about 6% for the Nifty 50 index. So you have 2 years of, I would say, subpar growth. 27, as I was saying earlier, we are looking at about 70% growth for Nifty 50 index, so that looks a lot better. And based on whatever bottom-up work I've done, reasonably comfortable with the forecast with analysts my team is building in. You would probably see some downwards here there. Broadly speaking, the growth is reasonably broad-based. So even if you see downwards in a few sectors, I'm hopeful you will still see about 15% kind of net profit growth. But having said that, the problem is that this is all factored in, right? When you're talking about FY27 numbers, I mean, most people look at on a 1 year forward basis, right? And on a 1 year forward basis, the market is still about 20 odd times on a 1 year forward basis. Many of the consumption names, if you look at, are still north of 50 P, the usual consumer staple names. The large cap tier 1 IT companies are north of 22, 23 P. So you don't valuation support. That's the problem with the markets. The FPIs at this point in time, there are 3 things, which is holding them back. One is the fact that valuation in India are high on an absolute basis. Valuation in India are higher on a relative basis compared to the rest of Asia, which has performed amazingly well, as we know. And you don't see any AI-related plays in India at this point in time. And the whole excitement in the world is around AI stories, right? And look at the way the Asian markets have performed on the back of all sorts of, direct and indirect AI plays. Korean markets are 20%, calendar year 20 days, 20 working days probably, right? It's like crazy, absolutely.
Sanjeev, just want to go back to the note that you published earlier this week, where you say, we wonder if the recent correction in and the continued large underperformance of the Indian market versus the other markets simply reflect, 1, a temporary blip in the markets, or 2, the start of a permanent reset in multiples to their correct levels. And if the latter were to be true, we will still see a lot more in terms of a correction in multiples for several sectors and stocks. So weigh in on this. Is it going to be a permanent reset in multiples? And if that is the case, are we in for a long drawn period of subdued kind of a returns, notwithstanding the 17% earnings return expectations for next year?
Look at this on a sector by sector basis. So, look at the fact that over the last 4 or 5 years, many sectors of stocks have absolutely given no return, by the way. Yeah? Many of the large cap consumer stocks are flat on a 5-year time frame. Many of the IT companies are flat on a 4-year time frame. and multiples are still high, by the way, even now. So my worry over here is that over a period of time, as the analyst investor community starts understanding the business model is not as robust as what they have made out in the past, you will probably see more correction in the names over a period of time. I'm not making a case for a swift price correction, but I think over I don't know, whatever time frame you take, you will probably see derating in this, in the multiples of the stocks over a period of time. So you will have a situation where earnings probably keep on going up, but multiples keep on going down for a set of sectors and stocks, which means probably not much return in the 3 to 5 year time frame. And we've already been 5 years, by the way. We have seen no returns in many of the sectors and stocks. So I think a decent portion of the market could be in for that. Having said that, market will still perform because there are still other stocks, the valuation reasonable and earnings are still compounding over there. So hopefully you'll still see some positive returns for the market as a whole, but I suspect many sectors and stocks will not give any returns for some time. See, it's a question of, ultimately what is right multiple for companies, or stocks. If you look at, for example, the FMCG companies, how do you justify 50p or plus minus, I would say, for stocks that are growing at, maybe not even 5-10% now. Even if I take 10% growth for an extended period of time, 30-40 years, I will struggle to justify 30p, by the way. I have no DCF unless it will take a very low cost of equity. It will give you more than 30p, by the way, with this kind of earning growth. So I think there has to be reset to the multiples. I mean, only time will tell, how quickly or how, what period of time that takes place.
Sanjeev, hi, good morning. I think going by all that you've said, Sanjeev, you're sounding a little bit more optimistic every discussion we have. At least, post the time-wise, price-wise correction. So I'll take that. Let's focus on a couple of changes you'll have made to the portfolio. ITC appears you'll believe most of the bad news is in the price, as well as Max Health. If you could tell us about those two, because those two are the additions, I think. Higher weightage and an addition. Go ahead.
Yeah, so ITC obviously has seen a very big correction based on the fact that the government raised tax on tobacco quite a long time. It will get implemented February 1st, but it's a done thing. If you take out the value of its non-tobacco businesses, roughly about 150 rupees to about 160 rupees, I think the analyst committee is probably giving higher. Let's, take some haircut over there. Then effectively you're getting the tobacco business for about, let's say, 170 rupees now. And EPS, which my analysts are forecasting for FY 2027 for the tobacco business, about 11 rupees or so. And this is after taking a big cut in numbers. So it's about 15 times, which doesn't look too bad. So my sense is once the reset happens this year, in terms of whatever damage has to happen to volumes based on whatever price increase ITC and other tobacco companies will take, you will probably get back to low single-digit kind of growth with price increases. 15p doesn't look too bad, I would say. It's obviously a cash machine. Free cash flow is very, very high, pretty much equal to the PAT over there. So 15p it doesn't look too bad, I would say. So that's the reason I've added it to the model portfolio. If you look at Max Hill, the other one, obviously it's seen again a decent correction from its peak, high growth company. If you look at the EBITDA numbers, if I remember correctly, this is India's 116 adjustment. After that, you probably see about 65% EBITDA growth between FY 26 and 28. It is not a cheap stock. It is trading at about 40 times FY 27 earnings. But given the quality of the company, execution, the long, growth, long runway of growth for something like healthcare service in India, and the fact this company can execute well and participate in that, I am okay with that. At least this company is growing very, very fast, by the way. So it looks okay, from a growth and fundamental perspective.
And in your model portfolio, you have also removed Embassy REIT and removed Lupin and reduced weight on Cipla. You want to take us through the rationale behind this?
I don't want to get too much into all this, but anyway, see, the fact is Embassy has performed quite well. We are probably coming to the end of the rate cutting cycle now. Maybe the RBI will cut another 25 basis point. Still a decent growth company, but it's done its bit. When we had it was about 320 rupees or so. So obviously it's done quite well in this market. So that's that as far as Embassy is concerned. Lupin has performed okay, I would say, last 6 months, 12 months, probably not much. Earning growth is looking a little bit risky over there, looking at what is happening to US generic pricing pressure. We're not seeing much of growth between 26 and 28 for Lupin. So done its bit, from a defensive perspective, it's fine. Simpler has been a bit of a disappointment. The fall in Revlimid revenues, it was anyway expected. That's happened a quarter earlier. But that's not the real issue over there. The fact is, what we were expecting was that, they will have sufficient contribution from the new molecules, which will offset the decline in Revlimid sales. But some of that, the new molecules that are respiratory portfolio, things seem to be getting a bit delayed. It does look okay, I would say. From whatever math we did for the domestic business, you can justify about 900,000 rupees just for the domestic pharma business, which is a decent, high growth business that will grow about 9-10% anyway. So it doesn't look too bad at current levels, but I guess we will probably not see much of earning growth over the next couple of years given the decline in Revlimid revenues not being offset by sufficiently from the respiratory portfolio.
Sanjay, we'll leave the conversation here for now. Thank you very much for joining in with your perspective. Moving on then, let's invite the management of CG Power. They reported a muted set of Q3 numbers. Revenues came in line with expectations, but there was a miss on the company's profits and margins versus expectations. Margins contracted due to continued investments in their semiconductor business. Amar Kaul, MD and CEO, CG Power, is now joining in. And just to set up the interview for today, we would like to discuss on their power systems that continues to see strong growth. Will that sustain? Any slowdown in the order inflow? And when does the semiconductor business break even? What are the timelines and the profitability metrics? Thank you very much, Mr. Kaul, by joining in. Let me begin with the top line growth. Reported revenue growth of 26%. How much of that is organic? How much driven by the Axiro acquisition that you did? And in Q4, what should we expect as you end FY26?
So thanks, Seema, for having me here. I think so pretty happy to be here with you. Yes, you are looking at the consolidated numbers, and you must see that I read the comments on PAT missing is big because of the strategic investments into our semiconductor business, and that's going to stay there. But if you look at the standalone numbers with a growth of 22%, we were 28% PAT, which I think is the positive leverage on what we are doing for the existing business. So new business that's added is Axiro, which did about 120 crores approximately. And so I think hopefully by this end of this quarter, it should also be able to break even and make profits as well.
Okay. And between power systems and the industrial segment, now power systems has been driving growth for you. Even in Q3, I think it was a fabulous growth of more than 40%. 9-month revenue growth has been 25%, while industrial has been lagging. Can you provide the outlook for both these two segments going into Q4 and FY27?
Sure. See, power, of course, we are riding on the wave of the way expansion is happening in the power industry in India as well as outside India as well. I think the good news is CG Power has been able to grow faster than the growth of that market. So which means we are able to take the share not only in India, but outside India as well. And I was sharing some numbers with the investors yesterday. If I look at my exports, even for the 9 months from April till December last year versus April till December this year, we are more than 50% up in terms of the bookings or the orders that we have booked for export. So which means the credibility of Make in India and the standards, the quality, the design capabilities we are having is started showing the results to us. The hard work that has been put in the last couple of years is showing the results there. Coming to the industrial sector, I think the good news for us is that we are growing much better than the market. Industrial, if you go to specific to the motors business, it has shown some improvement from the negative growth. It has come to the plus side on this, but then we are growing at more than 8% to 9%, which is much faster than what the industry is growing.
Amar, good morning. We'll just come back to you in just a bit. I want to just address the breaking news which is coming in right now. What we understand is that, a charter plane, which was carrying, and these are visuals coming through right now, a charter plane which was carrying Mr. Ajit Pawar, the Deputy Chief Minister of Maharashtra, has crashed. This was a charter plane going from Mumbai to Baramati. And, Mr. Pawar had programs lined up, public meetings, etc., lined up in Baramati. And, the plane has crashed. Civil Aviation Ministry sources are saying that there were 6 people on board. There are casualties likely, although we don't have official announcement yet. The visuals and the pictures, of course, look pretty bad. But this is what is coming through. Plane carrying Maharashtra Deputy Chief Minister Ajit Pawar has crashed during landing in Baramati. Actually, that's the other point. So during landing is when this plane has crashed in Baramati itself, where, as I said, there were these programs which were lined up. And as I said again, and we'll put this out, Civil Aviation Ministry sources saying there were 6 people on board this plane, and casualties likely, but we're waiting for an official announcement with regards to what has actually happened at this point in time. So just wanted to sort of, address that, and we'll try and, of course, confirm what is, the exact whereabouts status with regards to the people on board, including Mr. Pawar. So we are waiting for the details. You can see the debris of the plane crash, and I think the visuals, of course, looking pretty bad and dire. Baramati, of course, is the epicenter of the Pawar dynasty. Mr. Ajit Pawar, the Deputy Chief Minister Maharashtra, heads NCP, and of course, there are 2 NCPs now. One headed by him, the other, of course, Mr. Sharad Pawar. And of course, Mr. Ajit Pawar, one of the 3 pillars of the current Maharashtra government, which is the Shiv Sena, the BJP, and of course, Mr. Pawar-led NCP. Mr. Ajit Pawar-led NCP very much built on his brand, his personal brand, so this is important, of course, in that sense. To track and see what really has come through. So we'll wait for more confirmation, more details. But I thought this is obviously very important in terms of what has happened. Prayers, of course, for people who were on the plane. This is absolutely tragic. But we are trying to get an exact confirmation about what has really taken place. So the pictures are up on your screen. More on this in just a bit from now. Yeah.
Okay, all right. We'll wait for further details on that front. For the time being, let's get back to the conversation we're having with Mr. Kaul, the MD and CEO of CG Power and Industrial Systems. Mr. Kaul, I wanted to ask you about the industrial system business. Now, as you said, the growth has been, in high single digits, but margins have been a little under pressure. You've taken a price increase now on industrial motors of roughly around 17%. Do you think we get back to margins expanding from year on? And is there any other price increase that you're planning in this vertical?
Absolutely. So there's always a lag between the commodity inflation and the price increase that we do. And that's what you see here. So between April till December, we had increased about 10%, for which the realization has been pretty good. And we increased 7.5% in January itself. And there's a lag between price increase and the realization. So you'll see those coming in. So we're keeping a very good discipline on the price inflation versus the price. How do we get it over and above our operational efficiency that we are working continuously on.
So then we start seeing margin expansion from this quarter. Or quarterly, we do see that playing out, right?
Oh, yeah, I think it'll keep improving, because I think we are done with a lot of groundwork on the operational piece, what we can improve on. It's not only pricing. Pricing is just one lever that you have. It's also I2V, we call it Innovate to Value, which is more of VAV program that has got become the DNA of CG Power. And also the operational efficiency to keep eliminating the waste from the system. So all these initiatives are getting, very, very well as part of the foundation for us. Okay. So you'll see those good days ahead.
Okay, I want you to weigh in with regard to the transformers shortage. Could you tell us, if you have a broad number in terms of what is the situation currently? And since there are transmission lines that are getting delayed, do you think there is a fear that we could open up to China yet again, or you don't see that as a fear?
See, the way power is expanding in India as well as outside India, I don't see any concern on that, because capacity is a concern for everybody. I can talk about only CG Power, and I think the way we have been expanding capacity and the pace. Even I was meeting the ministry and a couple of senior government officials, and they were pretty, and they used the word that we are pleasantly surprised how quickly you're able to expand it. If you see, just 1 year back, we were about 20,000 MVA capacity for transformers. In December, we increased it to 45,000. And by April, I think we should be about 65,000. By July, we'll be adding another 10 to 15,000 MVA. So every quarter, we are adding to the capacity to help the country in the nation building.
Mr. Kaul, wanted to I think in the month of January, you had announced a 900 crore order for a US data center project from Tallgrass, 900 crore export order. This would mark your entry into this high margin global data center market. What kind of margins will you enjoy on this? And in your pipeline, are there more such data center orders?
So, yeah, a fairly good question, Rima. This is the beginning of the hard work being done in the last 2 years that we are working on. And data center is one of the key verticals that we have been working on. And okay, this one is a big order, but then yes, there have been a couple of more orders which are not to that size. But yes, exports is also one of the key focus areas for us, and it has already started showing results to us. Margins, I'll not be, because it's confidential between the customers and us, so I'll not be able to share the margins exactly, but of course it is much better than what you would normally get. I think important for us is to keep building on our design capability, deliver the quality that is required in the global market. So the customers are trusting us, so we need to make sure that we keep that trust on.
Okay. And are there more such orders in your pipeline on the data center business that you could announce in the coming, say, 3 months? And then we'd like to ask you about the semiconductor business.
Absolutely. I think the pipeline is very strong, not only data center, but for exports, as I said, in last 9 months, our export orders have gone up by more than 50%. And the pipeline keeps increasing. So in the forthcoming months, you'll keep hearing more and more on our global expansion, because we don't stay with only India company. Indian multinational is what we have the vision for, and you'll see progress on it.
Just on semiconductor, the losses widened. When do you break even, and when will the commercial production at Sanand plant take place, and how much will that add in terms of your revenues?
So, see, it's a strategic investment, and you know it pretty well. So semiconductor chip designing and development, that takes a time. And we have the CG Power, we have taken that conscious decision. So, and we are not a company which is quarter to quarter. Of course, we will live for organic business. If you see the standalone results, it is doing fairly well. Operating leverage is pretty high. Your profitability is much higher than your top line growth. But semiconductor is a strategic investment. It's going to take some time till it starts break even. But the good news is that the progress we are making is phenomenal. The team for our semiconductor business, for CG Semi, as well as X0, is doing fairly well in terms of the timelines. CG Semi Plant 1, which is we call it the mini plant, which is already operational and should commence the production in next 2 quarters max. So right now it is under approval and testing and validation. So in next 2 quarters, it should start production there as well. And the construction for the main plant, which will produce about 14.5 million chips a day, will be operational by December 2026. And then give it another 1 quarter or 2 for approval. So by 27, both will be fully operational.
Yeah, incentive booking is a little slow. So that's why you're sticking to that guidance, right, of December 2026?
Yeah, the plant construction for the new plant will be done by December 26. That's right.
Got it. Okay. All right, Mr. Kaul. Thanks a lot for joining in, giving us color with regard to business in both the verticals, and wish you all the best. We catch up soon.
Thank you, Nigel. Thank you.
Well, time to slip into a short break. Up next, we have the management of Vishal Mega Mart that will be joining in to talk about their numbers. Stay tuned.
Welcome back. The DGCA now confirming that all 6 people on board that charter plane have died, including Maharashtra Deputy Chief Minister Ajit Pawar. So absolutely shocking and tragic news coming through in terms of the Deputy Chief Minister Ajit Pawar being no more and passing away in that charter plane crash. And those are visuals, of course, coming in from Baramati. Apparently, this is the crash and the incident happened when the plane was, approaching landing, and this entire thing tragically resulting in loss of lives for all on board, including Mr. Ajit Pawar. Once again, Ajit Pawar, Deputy Chief Minister, Maharashtra, one of the oldest faces of Maharashtra politics, one of the three pillars of the current Maharashtra government, and hugely influential, especially in the Baramati region. Split away, of course, from his uncle Sharad Pawar. So there are two NCP factions now, one headed by Mr. Ajit Pawar, and the other one, of course, Sharad Pawar. Prayers and heart goes out to family and friends of those deceased. We can put out now that Mr. Ajit Pawar has indeed passed away in that plane crash, which has happened in Baramati. He was going to Baramati to address some public meetings, and this is what has transpired. Of course, we also understand that Chief Minister Devendra Fadnavis has cancelled his rally in the Konkan region. And we will, of course, be getting more information in terms of exactly what has happened, etc. But I think we can confirm. So some more information in that sense, which is coming through. The crash happened at 8:48 this morning, and the aircraft. But this is, of course, now we have confirmation, which in terms of the fact that he is indeed no more. So. Mr. Pawar passing away tragically, absolutely tragic and shocking news, which is coming through at this point in time. We imagine there will be more there will be condolences pouring in. There will be, of course, other leaders of the current Maharashtra government, Mr. Pawar Senior himself. We will hear from all of them this, of course, becomes more widely known. But the incident, of course, happening at about 8:48 this morning. And we can now confirm that Mr. Pawar is indeed no more.
Indeed, Mr. Pawar, one of the fiercest politicians here in Maharashtra, respected by all, prepared to take on both people from his team as well as the opposition. He's had that reputation, Ajit Dada, as he's called in political circles as well. No more. Very, very heartbreaking news coming in early this morning.
Nigel, this is, of course, not the time for it, but, this is also, of course, politically very significant in Maharashtra, because the NCP faction, which Mr. Ajit Pawar headed, was very much built on Mr. Ajit Pawar's sort of brand, personal brand, Dada, as you said. So now what happens there will MLAs with Mr. Ajit Pawar. Are we looking at kind of some sort of a realignment back with the original NCP, that is with Sharad Pawar? So we'll have to kind of sort of wait and watch for all of that, and that's the political side of things. But of course, this morning as we report on Mr. Pawar's passing, this is of course a deeply, deeply personal tragedy for, of course, his family and the wide base of support that he had in Maharashtra. And of course, in the Baramati region as well. So, absolutely sort of a tragic incident. Very, very much a Maharashtra leader, but of course, I think one of those leaders, who had not influence, but of course, widely known across the rest of the country in that sense as well, as someone who was a mover and shaker here in the Maharashtra politics in that sense. So. That's information which we can confirm now. We, of course, knew that there was the plane had crashed, and we were waiting for official confirmation, but that has now come through that Mr. Ajit Pawar has indeed passed away. I think we have Sanjeev Srivastava now joining us. He's senior journalist, someone who's tracked politics here in Maharashtra and elsewhere for a long time. Sanjeev, good to have you here. Just a quick word in on these developments, and what do you think are implications, politically speaking?
It is absolutely shocking that Ajit Pawar is no more. When your last few minutes since I have come to know of this, it's still not fully registering that he has gone away. He was not exactly very young, but he was still what in India we can easily describe, and he could have passed away as still a youth leader and somebody who had a very bright future and had a good present. And he ultimately the mantle of NCP, a very prominent regional party of Maharashtra, which has been there for last more than 2 decades. It would have fallen on him. But now what happens next would be interesting. Ajit Pawar had a bit of a falling out with BJP during the BMC elections. And where he would go next, what will be his next move on the political chessboard, is what was being talked about in political circles. But now, whether the NCP or Ajit Pawar faction will remain this way, I really doubt. It will have to, once again, it will be Sharad Pawar's party in total, and Supriya Sule may be the next heir apparent. It's very difficult to really, I'm still coming to terms with Ajit Pawar's passing away, to be very honest, then analyze the implications.
Absolutely, bolt out of the blue, right? I mean, just completely shocking that we are even sort of in a way reporting on it. But it is unfortunately confirmed now, Sanjeev. Sanjeev, do you think, I mean, again, from a political standpoint, and I know it's early, etc., but what you think this kind of the MLAs go back to Pawar Senior?
MLAs go back to Pawar Senior, Prashant, or depending on the constituency and what are the local equations, they may also be good pick for the BJP. So the MLAs will now decide based on their individual constituencies what will best serve them. Will they be better off with Sharad Pawar or with BJP? But I still think, and this is really the top of the kind of skimming at the surface only maybe, but I think bulk of them will go back to Sharad Pawar because that was their constituency, that he was their leader, and because Ajit Pawar was the kind of organizational face, right, somebody who Sharad Pawar had completely trusted and developed as a number two.
Right. Sanjeev, stay with us. We also have the former Maharashtra Chief Minister Prithviraj Chavan now joining in. Mr. Chavan, good to have you with us here, sir. It's a sad day, sad morning as we report on the fact that Mr. Ajit Pawar is no more, passed away in a plane crash in Baramati. Your first thoughts, sir?
Well, it's too shocking to describe. He was my deputy CM. First time when I became the Chief Minister of Maharashtra, he became the deputy CM of Maharashtra. And so I've worked very closely with him for 4.5 years. We had our differences, and we continued to have our political differences. But he was, without a doubt, a dynamic leader. Of course, he was surrounded by controversies, but a tall leader, a young leader of Maharashtra, in which people of Maharashtra invested in leadership, and people expected him to reach even greater heights. It's very tragic that another political leader in the series of Madhura Sindhya, Rajesh Pilot, and many others, he has also gone away. Electioneering has become such an active activity that you have to crisscross the state, and whatever means is available, one has to go. My first reaction is, of course, full details are not available. But what was this company from which this plane was chartered? I hear that this was fairly the company's track record wasn't great. It was just quickly put together company. A lot of political people had invested in it. So I think how did DGCA permit such private operators to operate is another big question, and that leads me to the thing which I've been arguing about is that we need to restructure DGCA completely. But all the same, this event will have major repercussions on Maharashtra politics. Ajit Pawar not only was deputy CM of Maharashtra, but he was also a leader of a fairly large faction of the Nationalist Party. And the Sharad Pawar faction seems to have merged in the Ajit Pawar faction of late. If you look at the Jila Parishad elections, which are ongoing now, the Jila Parishad elections themselves will be impacted because the polling is on the 5th of February. We're right in the midst of campaign, and this tragedy has hit us. It's very sad. My condolences to his wife, his family, and whatever political differences, he was without a doubt a young, dynamic leader of Maharashtra. Maharashtra will miss him greatly.
Well put, Mr. Chauhan. Just, I know this is not the. I guess it's too shocking as we hear the news. But as you said, right? I mean, what happens to the? Are we looking at a reunification of the NCP, or in terms of politically, how does this affect things, sir? In your assessment?
I think it'll be unfair to start commenting on the political outcome and all that. And let's not do it. Let's first absorb the shock. But as I said earlier, the Sharad Pawar faction has already folded into Ajit Pawar faction of late. So there is effectively only one party. It was led by Ajit Pawar. Now, what happens later on, I don't know. It's too shocking to even contemplate what happens.
Got that. Mr. Chauhan, absolutely well put. Thank you very much for your thoughts and thank you for joining us. Sanjeev, if you're there, thank you very much for being with us as well. This is a story which we will continue to track, report on, and get more details in terms of what really transpired with that incident which has happened this morning. So Mr. Ajit Pawar, Deputy Chief Minister Maharashtra, no more, passed away in a plane crash in Baramati earlier this morning. I mean, sometime before 9 a.m.
Longest serving Deputy Chief Minister in Maharashtra, served under 4 parties as well. 6 times I think he was the Deputy Chief Minister, and I was lucky to meet the man a few times. Extremely dynamic, witty as well. I recall a few instances when I've met him, and one of the most dynamic ministers we have had in the state. Ajit Dada, as he's fondly called by a lot of his supporters, a lot of his followers, and throughout the belt here in Maharashtra as well.
Okay, well, as I said, we'll keep coming back to this and get you more. Well, let's just turn our attention back to the budget, which is in front of us, 3 days away. Samir Arora is with us. He's founder, fund manager at Helios Capital. Samir, good morning. Good to have you with us here. Thanks for joining us. Samir, of course, is also one of the CNBC-TV18 budget editors. So, you'll hear from him before the budget, on the day of the budget, and of course, some analysis post the budget on that Monday, as well, coming Monday as well. Samir, good to have you with us here. Just a quick headline kind of view on this is, as many have said, one of the budgets where there's no noise about the budget. 3 days out, absolutely quiet. Any expectations at a headline level, and then we'll get into some specifics.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs, which may be defined as some endowments or universities or long-term, some X thing. So broadly will not matter to rest of the world, but anything that helps somebody helps everybody in that sense. But beyond that, I also have low expectations other than the normal stress. I mean, not stress that way stress, but normal stressing on capex and keeping fiscal discipline and all that, but not something in mostly market moving.
Samir, I remember when we spoke, when this LTCG thing happened, right? I think this was back in 2018. I remember you kind of started sounding very, very significantly disappointed when it had happened in terms of how this would have a impact over it was not just about then and there, but over the long run. And I think it has indeed played out in that sense, Samir. How should, if this is, I guess this is now too late to ask you what they should do, the government should do, but
I don't say what they should do because my game is to see what they will do. So what happens is if I keep thinking myself that it's so logical that long-term capital gains should be reduced, then I start believing it myself. And then I get carried away and saying that it's so obvious that this is what is required, or it is so across the world the same thing. So mostly my thinking is they will not do it. I keep arguing on Twitter for the sake of intellectual discussion that why yesterday's discussion on your channel with Lata and all was absolutely flawed. To say that because US has this and because some other country has it, India should have.
Samir, for the purpose of, and I think I was coming to that, right? Anant Narayan has written a piece as well. He was part of that program that you're referring to. why is that flawed? What Anant is arguing is taxation should be residence-based, like it is everywhere else in the world.
Oh, I'm not about FI thing. FI, of course, should not be here. There should be no tax in India. That is so obvious.
Then what?
I was talking about that debt and equity in India for Indian resident investors should be same or similar. If you want to say it that the equity guys are okay at 12.5, and over time you'll bring debt guys down to 20 and 15 or whatever, not to make it look that one set of people is arguing, if they are, that the equity tax rate for Indian investors should be increased to what they are paying on debt. Because I'm saying that is wrong, because the debt guys, when they are earning that interest and on that they are paying tax, somebody else is offsetting that interest from his income and is paying less tax. It's not the same in equities, where if I buy somebody's stock at 100 and it goes to 200 and I sell it, the guy who sold it to me at 100 can keep saying, oh my God, I made an opportunity loss. But he does not go and take a tax credit for it. And therefore, one side pays and the other side does not get an offset. But when you are doing basically interest, tax on interest, one guy is earning the interest and is paying tax. But on the other hand, the guy who paid that interest is reducing his tax. So therefore, effectively interest is a zero-sum game. And therefore, one guy wins and one guy loses. Whereas in capital markets or in equity, particularly cash equity markets, there's no offset. So if you broadly look at it, the equity guys might be paying more tax than what it visibly looks when compared to debt. And secondly, we can't conveniently leave out STT from all calculations and say because the US and all don't have. So if we broadly, I don't know exactly what is the ratio, but if STT collections are, let us say, I have no idea, equal to capital gains tax, then broadly we should look at it that the capital gains tax in India is not 12.5, but in aggregate 25%, if it is double. I mean, if it is equal, because STT doesn't come into any of these discussions. But if you're saying for FIIs, I've been saying from day one that there should be no tax in India, just like Indians are not paying any tax on all the investments that they are making days in US and everywhere else. And they are being taxed in their home country, which is India.
Yeah, but if you bring,
but I don't expect any of this. I don't expect.
You're saying no real tangible high conviction expectations from the budget. Let me put it that way. I'm paraphrasing you.
I'm saying I can dream in my mind and hope in my mind that they do some of this.
Yeah.
But we are not acting on that and not believing also, because these things. The fact is, practically the rates were just increased last year. So it is not easy for anybody to change them back. Maybe you can do 2.5%, 5%, even that will be helpful. So basically the thumb rule is, if you reduce, say, from 12.5 to 7.5, and you can say it's temporary for 5 years, market will go up 4-5%, because you are basically adjusting for the lower tax, and so the post-tax returns will go up, and that'll get you'll get 4-5% pop, and that will change sentiment. It will show that the market, government and the system accepts these things, even if they are for 5-year period or something. And you can change the sentiment. Otherwise, sentiment will need to be changed with A, passage of time, B, this EU deal, then US deal, then general things as they improve and earnings improve. So that'll take 6-9 months. That's how you can do one or the other.
Yeah, okay. That clarifies things. I can go on about that debt and equity versus debt, but I think that already debated that yesterday.
Our thing is, we normally go from one end to the other in terms of celebration. So just to tell you, at the end of 2007, we thought we were getting so much FII flows that we stopped FII flows, if you remember.
Yes.
And we used to have capacity. Now we are feeling that there is so much equity flows. Actually, it is not so much equity flows. It is required because it's replacing FDI also a little bit. And anyway, who in the world feels bad that there is equity flows? And then they will suddenly say the valuations are high. Which valuation is high in the sense? Of course, they may be higher. But they were like this premium to other markets, the absolute P's in the 18 to 22 range have been there forever. So just because the market fell, we are trying to justify that this must be because of high valuation, but it didn't fall in 23 and 24 and whatever 21 and last year and 7, and they were the same valuations. So I don't believe this. That's why I recommend everybody to read the halo effect. That if the price is down, you'll make some logic for why that price is down. If the price of a stock is up and is up 20% per annum for 5 years, can anybody say that this is bad management? No, it is the best management. They have great plans. That is why so it's everything.
Samir, one argument against long-term for FPIs, right? Because the problem is rupee. I mean, it's not a BOP problem. It's basically the portfolio flows which is hurting, FI sales which are hurting, and that's showing up in the currency, etc. So you need dollars in that sense. Would it be a hard sell if they made taxation residence-based? I mean, I'm not saying it'll happen. But you think it'll be tough to say?
Because
no, but I'm saying people will say, well, you know, it's unfair. You're giving FIs for easy exit. Local investors are being taxed.
They are not giving any extra benefit to FPI because when the Indian guys, and now, you know, you see everywhere that because of Gift City and all, that Indians are investing in US mostly, let's say, and everywhere else, they are not paying any tax there. That tax is being collected by Indian government. So effectively, the US government is leaving that tax and saying, no, you can pay it in your own country. So it is not this thing, but I'm saying it becomes difficult once you have set it. Therefore, I've been saying reduce it for everybody. Don't do it only for FIs. Just reduce for everybody to 7.5 or ideally to 0. And you change STT a little bit because on the other hand, separately, we keep saying, although we own all these exchange stocks, that, you know, the volumes are too high, speculation is too high. Okay, change one, but of course, on Twitter, I'll be attacked by all these traders, but broadly adjust if you so want, or let it be for 5-7 years and then decide after that. Because we need something instantly. By the way, separately, because now we have to do a lot of calls with our customers, our investors, because of currency fall and all. It is a bit embarrassing the way the currency is falling every day when, you know, the dollar has depreciated by some 2.5% in this month. And against that, the FIs have lost 2% on that. So it's a 4-5% difference in basically 2 weeks. So all these things have to be handled. If tax is there, you're paying tax on INR returns. And then the euro investor has lost 20% in 1 year on just the currency. That is why best is, since everything can't be controlled, at least tax can be equalized. I think anyway it's too late. It must have been printed by now, the budget, so let's not.
Samir, I had more questions, but we've been squeezed in because of that unfortunate news which has come through. But really appreciate you coming on. Thank you for joining us, and we'll see you on the day of the budget, and in terms of what really comes up. But as Samir said, no real tangible expectations in this one. A lot can be done, should be done, but of course, don't keep hopes too high, as he put it. We'll take a break. On the other side, we have the management of Vishal Megamat join us on the third quarter numbers. Coming back quickly.
Welcome back. Vishal Megamat reported a steady set of Q3 numbers. The stock is down nearly 4-5% in trade, as the revenue growth at 17% is lower than the revenue run rate the company has enjoyed in the past. And even the reported same-store sales growth at 6.1% was impacted on account of the advancing of the Durga Puja to Q2. Adjusted same-store sales growth was at 9.6%. Guninder Kapoor, MD and CEO of Vishal Megamart, is now joining in. Thank you very much for joining in, and thank you for waiting by patiently. Now, historically, and when we spoke to you during the IPO, you used to grow at 24-25%. 9-month revenue growth is 20%. What is the sustainable growth path?
Firstly, thank you very much for having me on your show, and good morning to everyone. I must point out that at the time of IPO, we had guided for a growth of about 20%, an EBITDA growth of about 25%, and PAT growth of about 30%. So those were the broad numbers And if you look at a performance for the first 9 months of the year, it's 10% same-store sales growth, actually 10.3%. To be precise, the EBITDA growth is 24.4% and the PAT growth is 30%. So it's exactly as per what we had broadly guided at the time of IPO. And each of the quarters have been quite consistent with that guidance. What you're referring to is indeed correct. The festive season this year is split between Q2 and Q3 because Durga Puja fell in Q2, and therefore to that extent we got extra revenue in Q2. So in Q2 we achieved the same-store sales growth of 12.8%. Consequently, the EBITDA growth was also 30% as against 25%, which is what we had said. And our PAT growth was 46.5% in Q2. So if you look at our YTD numbers where everything becomes equal, we are exactly as per what we had guided, which is 10.3% same-store sales growth, 20% overall revenue growth, 24.4% EBITDA growth, and 30% PAT growth.
Okay. And that is the long-standing guidance even as we look into FY27, because there appears to be increased competition from the likes of Zudio, Meesho, etc. So given the way the competitive landscape is emerging, you're confident about this 10% SSG growth, 20% top line, 25% EBITDA, and 30% growth sustaining at least for FY27?
We feel pretty good about that, but I must quickly clarify that that guidance is for the full year. As you know, we have seasonality in this business, depending on when the festivals fall in which particular quarter, and also because of the onset of winters and summers and so on. And therefore, I must quickly clarify that the guidance is for the full year. It is not for each of the quarters which constitute the year. Again, depending on the seasonality, some quarters would be higher and there would be some other quarters which will be consequently lower. But the full year guidance, yes, that's a guidance.
Okay. And how is the competitive landscape on account of, say, Zudio, Meesho, etc.?
Well, the competitive landscape has been quite intense over the last 2-3 years. In addition to the couple of players that you've mentioned, we have other very large competitors too. And then we have quite a few regional competitors who compete with us in various parts of the country. And finally, you have competition from the digital commerce, quick commerce, etc. But I would submit that the competitive landscape has not changed that dramatically over the last 12 months. It just continues to be there. And there are various periods or various quarters when some folks are expanding, and there are certain other periods when some folks in the market are not expanding or restructuring their businesses. So that, of course, changes from quarter to quarter. But otherwise, I would submit that the competitive landscape over the last 1 year has been quite the same.
One word answer, Kedara, block coming anytime soon in the next 6 months, say?
I don't know. As you know, I'm not the investor there. So, yeah, I wouldn't know.
All right, a short conversation, but thank you very much, Mr. Kapoor, for joining in. Great chatting with you. Get into a break. On the other side, Lata is waiting by to speak with experts on why bond markets are sulking so much ahead of the budget.